Accounting equation and Excel. Bank reconciliation month 1, part 1. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation, using Excel. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our Trust Me, I'm an Accountant product line. Yeah, it's paramount that you let people know that you're an accountant. Because apparently we're among the only ones equipped with the number crunching skills to answer society's current deep, complex, and nuanced questions. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you could begin back there or just build your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook, though, 4 tabs down below. Example, month 1, practice, month 2, example, in essence, answer key, month 1, prior month of operations, the practice tab, having pre-formatted cells so you can practice the practice problem with less Excel formatting. Month 2 tab, the one that we will be working in, current month of operations, where we started with a blank worksheet but are basically working within a template at this time. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing, remembering that we're basically building our bookkeeping system based on the accounting equation, it acting as, in essence, our trial balance from which we construct and have constructed our major financial statement reports: balance sheet, income statement, statement of equity, noting that income statement, sometimes called the statement or profit and loss report. So this time, we want to look at one of the major internal controls after having entered 2 months of data input, that being the bank reconciliation. As we do this more in a manual process, in what I'm calling more of a 2-dimensional type of system, we always want to keep in mind what is going to happen if I was to use software like a QuickBooks or a Xero. And if I had bank feeds in the process, what does that do to my bank reconciliation? Noting there are rumors out there, and I can understand them because people start to think, now that there's AI, now that there's technology, now that we have the bank feeds and this connectivity and this online stuff, we no longer need the bank reconciliations. They're not a thing anymore. That's not true. They are still a thing. It's just that sometimes the bank reconciliations could be easier depending on the type of industry we are in. In other words, if we're a cash-based business, if we're like a gig worker, for example, we might not be doing a full-service accounting system, but rather relying on the bank information to construct our books, in which case that's going to make the reconciliation a lot easier because it's not like 2 sets of books are being reconciled in that case. Rather, we're just basically saying, I got all my information from the bank, and therefore I'm just double checking that there wasn't any duplicate transactions or any transactions that I missed in the bank reconciliation. So you still want to do it, but it might be very easy. However, a lot of business can't do that. Every time we deviate from a cash-based system to an accrual type of system, that's going to enter a segment where we have to do data input and then check it against the bank, which is really the full service accounting system that used to be the main internal control and still is a heavy internal control. In other words, the internal control of saying we're going to do our cash account and then the bank is going to do our cash account separately, and then we're going to compare them, reconciling any difference so that I know exactly what the difference is, which proves to us not only that the cash account is correct, but everything that feeds through the cash account, given the cash account is the lifeblood of the company, all cycles flow through the cash account. It gives us a surety about all the other transactions as well. So it's a huge internal control, basically only second to the double entry accounting system itself. And you're still going to need it, and it still might be somewhat complicated if you have more accrual transactions like accounts receivable involved, accounts payable, inventory involved, payroll is going to throw an accrual kind of component in there, and if you still write physical checks. A lot of companies don't, so if you don't write physical checks, then it might be a little bit easier to do the bank reconciliations because you're not going to have this massive timing difference between when you wrote the check and when someone clears the check. The quickness of depositing a check does make the reconciliation process easier. However, it doesn't eliminate the need to still do it. All right, so that's going to be the general idea. So what we're going to do is we're gonna take our cash account, which is basically our general ledger. We're gonna do some fancy formatting in Excel so we can get just the transactions, and we'll put it in a format over here. So we'll do some fancy Excel tools and formatting to try to get it to look like this, basically a general ledger type of format. And then we will compare that to our bank statement over here, imagining this is the bank statement that was from the bank. That's what we do for the reconciliation. We'll start off by looking at a worksheet, which is usually what is done in like a Xero or a QuickBooks system. In other words, you usually have a worksheet that's going to pull in essence, the general ledger account, and then compare what has cleared in the system compared to what is on the actual bank statement. This process is not the bank reconciliation, it's the bank reconciliating process. It's the worksheet that helps us to then generate the bank reconciliation, which is basically going to be a worksheet something like this, which will tie out the book balance and the bank balance. And so we'll do a bank reconciliation, and then we'll compare the bank reconciliation in and then we'll see if we need to record anything based on the bank statement. If something's on the bank statement, not in our books, we typically need to add it. All right, so let's see how that works. Let's go to the month 2 tab. I'm going to scroll up. I'm not going to have any freeze panes on, so all the panes are unfrozen. So we're going to say, all right, that's good. I'm going to go all the way to the right and just give me some space to put my bank reconciliations. I'm going to put them on the right of the worksheets. If I have to move them later, I'll move them later. So I'm going to make a skinny FK by going to the skinny over here. Home tab, let's format paint that and put the skinny here. All right, so first we're going to start with the bank reconciliation, bank rec for month 1, the prior month of operations. And we're going to make that red and white. Now note, ideally what you would like to do is do the bank reconciliations, as you go month by month. But in practice, particularly for small businesses, oftentimes people do kind of wait a while and then go back and have to reconcile all the bank recs multiple months at a time. We're going to do that here, reconciling 2 months at this time, because in part we want to do a comparison side by side, comparing month number 1 problems to month 2 and problems beyond month 2, month 1 often having kind of difficulties unique to month number 1. So note that the data that we need is from month 1. So we have the prior month tab over here. So I'm going to go to the month 1 data because I closed out month 1 in our current tab when we worked in month 2. I'm going to scroll all the way to the top of this thing, and I want to take the detail and the cash account here, which is basically our general ledger in the format of our accounting equation. And I want the date column as well. So let's do the date column first. I'll scroll all the way down on the date column, down to the last transaction, which is right there, boom. And then I'm gonna hold down Control so I can copy non-adjacent or not next to each other columns and put my cursor on column, the cash column, and then scroll down. It pops back up because I have the freeze panes on, which actually worked kind of nicely. So I'm gonna scroll all the way down and copy these two together. So now I'm just gonna have these two selected. I'm gonna right click and copy, and then I'm gonna go on over to my month 2 tab, and I wanna paste it special. So I'm gonna right click and paste it just the values because the formulas are not going to work for us. So there we have it. So now we have the date. Let's make this a little smaller. I don't need this expanded out like that. Now the date column, I need to have dates in it. So I'm gonna select this whole thing, or I could go back on over here and like select the date column and format paint it, and then go back on over here and say, all right, I want this whole thing to be in a date format. And then it gives me my dates, so that looks good. And so what I want to do now is I only want the detail of the activity. I want to remove all of the balances, and I want to remove all the zeros because those are not necessary. However, to do that, notice I don't have a date field on every line. So first, I want to go through and put a date field on every line. So I'm just going to copy the date field that applies and paste it. So I'll just copy and paste the date field to any ones that don't have them. Pasting the date field. I'll keep the balance because I want to delete the balances. So date field, I'm going to paste here. These are all still 1, 1, so I can use the same one. This one, that 14, I'm going to copy that and paste it down here, the 114. Boom. The 115, I'm going to copy that and paste it here. Paste it, boom. The 115, I'm going to copy that. I could have used the same one and paste it. The 116, I'm going to copy that and paste it. And then the 117, I'm going to copy that, paste it here. This will help me to sort when I'm going to make it into a table and then sort it. And then 118, copy that. I'm going to paste it here. I'm going to paste it here. I'm going to say 119, copy that, Roger. Roger that, 10-4, paste it here. 123, copy that, paste it down, paste it down. 124, copy that, paste it down. 125, copy that, paste it down here too, otra vez, because that's another 125. 126, copy that, paste it down. And 126 still, so I can just keep the same one, pasting it down. 130, copy that, paste it down. I'll paste it here too because we're still on 130. Paste it here because we're still on 130. Paste it here because we're still on 130. Wait, that's right. And then this one, okay, that's good. I think that's it. How come I have so many more? I think that's good. Okay, and then what I want to do, let's delete all the stuff below it. I don't need this stuff. What is this doing here? I'm just going to take that, right click and delete it, and shift the cells up. Okay, so then I'm now going to make this whole thing into a table so that I can sort it by the date and the amounts. So I'm going to select the entire thing. I'll just grab this whole bit, and then I'm going to say insert tab, tables. I'm going to convert it to a table. Boom. There it is. I'm going to say, okay, that's the one. And then I like to make it blue, so I'm just going to make this whole thing blue so it matches my formatting. So I'll make it bordered and baby blue, baby. It's nice and calming. Calm blue, baby blue ocean. All right, so then we can say, I'm going to sort it now with this little sort drop down. Sort it. Boom. I want to get rid of all the balances. So I'm first going to get rid of all the balances. So I'm going to scroll down. These are not necessary. This 200, where did that come from? How come that doesn't have a date next to it? K pos O. I think that should be, according to my worksheet, this should be 130, 131. I'm going to put a date there, 131. So sorry about that. I'm going to resort it. So I should just have balances down below. Everything else should have a date. So I think that's good. So by the way, I'll give a double check if this is to see if this is wrong, because it should tie out to our ending balance. I'll show you in a second. So I'll delete these. Now I'm going to delete it. Now it looks a little different because I have to say delete the rows because it's in a table format. So I just delete the rows. All right. So there is going to be that. So that's good. And then I'm going to sort by the balance and get rid of all the zeros. So now I have all the balances. These are the ones that are negative. All these zeros, those are not necessary. Let's get rid of those out of our trial balance. You are not needed, and so therefore you will be deleted. And so we'll delete the table rows, and then we'll delete all the blank ones. Also not necessary, so we'll just delete those. Deleted. Delete rows. So now let's double check. If I sum this up, this whole thing adds up to 88811. 88811. Let's go back to month 1, and there it is, 88811. So my ending, if I sum up all of the activity, I should still come up to this number. That's my check figure. If I didn't, then I would do that whole process again and see if I could just get the activity. In other words, if I just get the activity, the actual transactions, and remove all the balances, then all of that activity is the GL that should add up to the ending balance if I run a running balance on it. All right, let's go back. So I think that's good. Let's put the date range back to the oldest one first, and then let's do a running balance. A running balance. I was running balance. You may not know this, but I can run like the wind blows. I'm gonna say that's from Forrest Gump. By the way, no one knows what you're talking about. I know. We're gonna say, let's wrap the text and center it. Running balance. Let's make this black and white. Everybody's seen Forrest Gump, haven't they? Dude, that movie's ancient, man. And then I'm gonna say this is gonna be equal to this running balance. Now it's a little tricky because it's a table. It tries to guess what I want to do, but that's not what I want to do. I want to say this, what the second one equals this plus the one above it. So I get a running balance. So it's going to be the plus the one above it. And then again, it tries to guess what I want to do because it applied it up here. I'm going to undo Control Z, and then I have to copy this second one down. So it's a little wonky with a table. The table tries to help you there. And then I should get to my same ending balance of 88811. The table tries to help you, but it doesn't. And these little green arrows are saying, hey, look, this top formula is different than all the rest of them. And, you know, that's okay. That's what I wanted it to be like. So sometimes you might not like the table. You could also use the filters and the data instead of doing a table. But I feel more confident when I'm sorting with a table for some reason. Maybe that's just me. All right. So now I'm going to go through this and say this is all the activity that happened in our side in the cash account. Let's put borders around this side. I'll put borders around there. And this is according to the bank what has happened. So now I'm just going to compare what is in the bank, and I just want to check off if it's on the bank side that it's also on basically our side. That's going to be the idea. So notice if it's on the bank statement and it's not in our books, it's most likely that we're going to have to fix our books. However, if it's in our books but not on the bank statement, then that might be okay because it might be an outstanding item, something that we entered that hasn't cleared the bank. The classic example being a check, right? But it could be, you know, electronic transfers could be that way as well if we record the transfers before the bank records them as they happen, right? So it just depends on the system. Now, if we built our accounting system from the bank, meaning we didn't do it separately, we waited till the bank feeds came in and built our system from the bank, then all the dates are going to be the same. There's not going to be any difference because there's no timing difference, right? However, if we did a full service system where we have at least some of our transactions due to possibly using an accrual system that's a little bit more complex than just building our books from the bank statement, which we have to do in some cases just because of the nature of the business, or if we actually use physical checks, which a lot of people don't, but some people may still do that, then we're going to have some transactions that the date will be sooner in our books than what will be on the bank statement, because the bank statement doesn't know about everything yet because it hasn't yet cleared the bank. So that's the reconciliation that we need. So that's what we're looking for. So our worksheet here is this. I'm just going to look through each of these and check them off. The deposits are usually the easiest ones if our system is set up properly. In other words, like if you use Stripe, or if you have PayPal, or if you use credit cards that people pay you with the credit cards, then you have to be careful of that grouping problem that we talked about through the practice problem, where if you record every transaction in QuickBooks as they happen to the checking account, you're going to end up with a whole bunch of deposits that are smaller than what might be on the bank statement, who grouped those deposits together, aligning to the intermediary transactions that came from Stripe or from PayPal or from the credit card company. That's why we use the undeposited funds in order to then transfer them from undeposited funds to the checking account, grouping them in the same format that will be on the bank statement, so that we can easily do the bank reconciliation. So in other words, if you find that you have to add things together in order to tie out to numbers on the bank statement to do a bank reconciliation, you're probably not doing the data input correctly. The way to fix that isn't to take a whole lot of time doing the bank reconciliation, which you might have to do for a few months to figure it out, but to fix the data input, possibly using the undeposited funds or the clearing account, so that you can properly group the transactions that actually hit the checking account. So if we have that, so let's just go through this. Now, the other thing we have here is this 30,000. That's going to be a problem, because in the first bank reconciliation, when I started my new accounting system here, from the prior accounting system we imagined that was outside of our QuickBooks that we were doing, or in this case Excel, that we were doing before, there might have been outstanding items in that prior system. So I had to put in my system a beginning balance of 25,000, not 30,000, as the beginning balance. Why? Because that's what was in the prior balance sheet. Okay, so that's going to possibly be kind of an issue, because usually I should have a beginning balance that ties out to this 30,000. So that's the beginning balance issue that you will typically often have when you do the first bank reconciliation. So we'll talk about that possibly later. So let's just go through these. We've got the 65,000. So I'm going to go over here and say, all right, if I look at this one, I'm just going to check them off. So here's the 65,000. I'll make these green as we highlight them. So I'll say, let's make that green. And then I'll go back on over here and say, I'm going to make this green, or color it something. Make that something orange. Okay, that's cool. Get out of here. And then 50,000. This 50,000, let's see if I can find that. Here's the 50,000. So I'll make that green over here. And then over here, we'll make that orange. And then here's the 7570. So 7570. So note the date is 120 here. The date on the GL is always going to be either the same, or it's going to be sooner than what's on the bank statement. Notice the bank can't have known about something before we knew about it, right? Either we made our transaction from the bank, in which case we're going to use the bank's date and it'll be the same, or we knew about it before the bank because we recorded the transaction before it cleared the bank. All right, so then we've got this one. Let's make it orange, and then we've got the 20,500, and we'll make that 20,500 and 224. So okay, 20,000, and this one's on 221. All right, good. So note the dates. The dates are not always going to be perfectly helping us out. So that's why the deposits, we would like the dollar amounts to really help us out, because we don't have any. We might have, if you used electronic transfers, you might have the actual customer who paid you, but you might not, depending on how the system is, if it just came for like the credit card company or something like that. On the decreases, if you had the checks, if they were physical checks, you would have the check number helping you, because the date will be very off if they're checks, because it takes a lot longer for the check to clear than anything else. If you don't have checks and they're electronic transfers, then you're not going to have check numbers, but the date should be a lot closer, if not the exact same. If you built your books from the bank, they'll be the same. If you had electronic transfers and you built your books first, then your dates on your books will be sooner, but usually within 3 days or something. And if you have checks, then the date's not going to be as helpful because your date on your books will be a lot sooner, most likely, but you have the check numbers to help out. All right, so now let's look at these. So we have 12, let's look at the 12,000 and see if we could find that over here. 12,000, let's make this yellow this time. So we'll make this yellow this time for the decreases, and this one we'll just make this the same. Oh no, we'll make this just the orange. Now these two, the 1,000 and the 4,000, I'm not going to be able to find these over here. So now I'm going to go, oh man, I can't find those. What's the deal with that? We'll get back to that problem in a second. So I'm going to say, okay, I'm just not going to worry about that right now. Let's go to the 16,000. So I'm going to say, all right, there's that one, making it yellow, and then boom, and then the 7,000. I'm going to go like, okay, 7,000, let's make it yellow, and then like, let's make it this color, and then 6892. So we're like, okay, 6892, donde está? I don't see it. So I think it's the sum of these two, and those, I think, I'm not sure exactly why, but I'm going to go ahead and say, okay, let's make those like like an orange to indicate that they were problem colors, and I had to combine those together, but I think I still found the number of 6892, so I'm going to say that's okay. Let's do the 72, we should still be good. 72, let's make that back to the normal yellow. That has been located, making that over here this color. 3780, so we're gonna go, okay, 3780, donde? Okay, that's the sum of all of these. I'm not gonna go back and try to look at that, but we grouped them a little bit differently when we did the data input in our accounting equation, because we broke out each of the lines. So I'm just gonna say, okay, there they are. Let's group these. Let's make those. I have another problem grouping section, so let's make those orange again. I'd like to make it a different orange, but that's okay. We'll do those. And then what else do we got? So I think that's this one. So then we've got the 12,000. Okay, so that there's a 12,000. I think that's it. Doing this fairly. Let's make that one yellow. That's not a problem one. That one's legit. No problem. It's not causing us problems. And then we've got 620. So 620. Boom. There it is. Okay. 620. You have been located. And then 15,000 is this one. Ba-boom. 15,000 has been located. Boom. And then boom. And then we could find these two. The 115, the 15, I'm going to look over here and say, oh no, I can't find those. And so those are on the bank statement, but not on our books. So now we're left with a situation where the bank, so here's my ending balance as of 131. Here's my balance on the bank statement, 61,241.85. So 61,241.85. So I have this difference that I have to reconcile, right? And so hopefully the difference is going to be then the stuff that I didn't color, the ones that are still blue, and the stuff that's on this side, which are these two and this one, that aren't on our system, right? So we have a couple problems that should be the reconciliation process. One, the beginning balance is 30,000 instead of 25,000. I've got these two, which are conspicuously adding up to that $5,000 difference. that I couldn't find in our system, and these two that I also couldn't find, but these two I could probably add, right? So those are the things that I have to kind of deal with. This is what normally happens kind of in QuickBooks when you're trying to reconcile, right? You're trying to say, if I had the beginning balance, see, the problem is here's this beginning balance. Let's make that one red because it should be 30,000, right? I should be starting at the 30,000, which has a difference of this minus this. We have a $5,000 difference. Let's delete all this stuff. So this should be, so bank beginning balance, and this is the difference. Okay. So now let's sum up all the ones that have cleared. So the ones that are still blue are the ones that are in our books that haven't cleared, which might not be a problem. Those are going to be those should be the only differences once we account for that beginning balance problem and once we account for this issue here. So let me show you what that means. So let's say we're just going to take all the colored ones. So we're going to say these are all like the yellow and green ones. Let's make them green just so we can try to indicate that. This is going to be equal to the sum, and this is the cleared activity of all of this. I'm going to pick up that 25,000, even though that's the beginning balance, which is kind of wonky. I'm going to close that up, and then I'm going to say plus. So here's my formula up here, plus the sum of these two, closing that up, and then I'm going to say plus just this one. So all the colored ones, those are the cleared balance. Here's the formula. I just summed up the first group, summed up the second group, and then that last one. So now here's the bank balance. So here's the bank balance, and then here's the cleared balance on our GL. The difference is going to be equal to the bank minus the cleared balance. It's 165. Where does that 165 come from? That are these two. These two were on our books. These two were not on our books, but they're in the bank statement. So typically we're going to have to add those generally to the books because they were on the bank statement. So you might say, well, how is that the only difference? Because we also had like this stuff, this 30,000 was different than the 25,000, and this was different. Notice though that those two kind of net each other out, which will often be the case with the first bank reconciliation. People will often say, oh no, I can't find this or this, but then they find, oh, but it still reconciles, so whatever, I'm just going to move forward. You could do that, but you probably want to note what is happening. What happened? Well, what happened is from the prior bookkeeping system had a difference between the book balance and the bank balance of that 25,000, which were the outstanding items as of, in our case, the end of 12/31 of the prior year, right? December 31st of the prior year. So the beginning balance that we took from the books was only 25,000, whereas the bank saw 30,000 because that was the difference. That was the reconciling items. Those were the checks that were written that hadn't cleared. Now, if those checks do clear in the current month, then you'll see those two will net out beautifully. It's like, okay, well now they cleared in the current month. That's the difference. So these two problems kind of net out each other. However, that's not always going to happen because sometimes that reconciling difference is for things that never clear, like checks that never clear, or there's been a data input error in which that mistake isn't going to net out against each other. So that's one of the issues you got to kind of think of and say, well, what I can do then is I can fix this, beginning balance and enter these prior checks as of prior to the first January 1st into the system. So what I could do is change this beginning balance I entered into the system to 25,000 for the beginning balance, and then enter the checks so that it shows in there as multiple items, right? 25,000 entry for the beginning balance, and then two other entries for the checks that are decreasing it, that are in the system. Let me try to explain that better. If I go over here, what I entered into the system was 25,000 on the checking account. What I could do instead is enter into the system 30,000 here and then enter those 2 checks prior to the starting point, prior to January, which is where we started the system, so that then I see the detail. It'll still add up to 25,000, but then I will see the detail of the 30,000 beginning balance tied out to the bank and the 2 checks, which are the difference. And then if one of those checks still didn't clear, I could still show it as being uncleared and then deal with it in the future to void it properly in the future so everything kind of rolls forward. So that's one of the issues. You also might say, hey, well, also, all of these blue items aren't showing up there. That might be okay because all of these blue items were in our books. They're not on the bank. And if we didn't construct our accounting system from the bank, we would expect that we would have some items that we knew about because we entered the transaction before the bank because the bank doesn't know about them. So ideally, we want to get to the system where these blue items are the only reconciling items. Those should be the difference, which they basically are, except for that 165, the items on the bank statement that aren't in our books. In a QuickBooks system, we fix that by entering this 165 into our books before we can reconcile. I want to contrast that to a book system, which we'll talk about later, where when you do a bank reconciliation for like a textbook, it will first force you to do like a bank reconciliation with 2 sides, adjusting the bank side and the checking account side, and then do the adjustments, right? Whereas in practice, what you normally do using accounting software is you fix the transactions that are on the bank statement that aren't in the books by recording them, right? And then the only difference should be the items that are in our books that aren't on the bank statement. All right, so we'll talk more about that next time. What I have here, though, is the worksheet. This is like the data input that you would do. This is the reconciling form that you would basically use within a QuickBooks or a Xero. It's not the reconciliation statement. The reconciliation statement is what we will do next time. That's the thing that will be generated after you get this thing down to 0, meaning the software will say, this number is down to 0. You have reconciled when this difference is 0. How do we get it to 0? We enter these 2 transactions, then this difference will be 0. Then the software will say, you have reconciled. Even though you have not clicked off all of these items, the system will then generate the report showing these items as the difference. That's the reconciliation. That's the difference items. All right, we'll talk more about that next time.